Hey guys, Namadar here, again you're with us in the traders. Today I want to talk with you about the interest rate. Why is that? Because everyone talks about the decreasing in the interest rate that's going to be tomorrow on Wednesday. So which stocks are going to affect and going up and which stocks are going to decrease. So stay with us and you know which stocks to buy. Here, as I said in the promo, today I want to talk with you about the interest rate. So, as everyone here, and I'm sure you heard also, that tomorrow is the announcement of the Fed, right? The Federal Reserve are going to announce on which way are the interest going to move. If it's going to move up or more going to move down. Well, by any analysis and any projection, it's going to move down, right? Going to decrease. The only question is if it's going to be by 0.25 or by 0.5. All right, if it's going to be quarter percent or half a percent. That's the only difference between the projections. All right. So, how it's going to affect on the stock market and on which stocks? So the interest rate. It's pretty easy to understand it. Interest is the cost of money, all right? How much your money is cost. So it means it's going to be good for those who need a lot of money for their operations, and bad for those who need less money for their operations. But there are some exceptions, right? So let's elaborate, all right? Let's divide it for two, good and bad. Stocks, which is going to be good for them, are real estate stocks, right? If it's for living, if it's for offices, if it's building some homes or buildings. Why is that? Because this kind of companies are always work on credit. They always have huge debt, right? Or pretty big debt because they need to build something big, and then they're just rolling their debt. They always rolling their debt. They never pay and stay without any debt, because the only way for them to grow, it's always by having the debt and paying the interest on the debt and growing up and grow with that. Alright, so the first kind of companies are REIT companies and real estate companies and constructors that are going to build some buildings or other kind of assets. Alright, so this is the first company that you'll see increase. But don't miss it. I have something very special to say in the end. Alright, don't just run and buy some real estate stocks. I have some point to say about it, but I'll say it in the end. So don't miss it. That's the first. Second are retail companies. The reason that retail companies are going to enjoy a decrease in the interest rate are they always work with suppliers that they pay them with let's say 90 days grace, right? So it's good for them because if they pay them with 90-day grace, they have what to do with their money. They don't need to be in a rush to pay, and they're always holding some debt to pay, right? And also remember, they also get their money with some with the movement of more days. So it's also good for them. The third are holding companies. Why is that? Because holding companies have a lot of debt to buy their companies, their operational companies, and when they buy it, they are paid their debt by the dividends they got from these kind of companies or by selling some shares. But mostly, if they like this company, want to hold it, they pay their debt by the dividends they get. Alright, so for them it's also good if there is a low interest rate instead of high interest rate. So that's what we talk about when we say companies that are going to enjoy a low interest rate or the decrease in the interest rate are holding companies, real estate companies, constructions, building constructions, and retail. Alright? The other part, those who are going to not enjoy of it, actually they're going to suffer from the decreasing in the interest rate, are banks, right? Why banks? Because they actually give loans, right? And for that loans, they get paid by the interest rate. So as the interest rate is decreasing, their income is getting down. If they have high interest, they are getting even more interest. So their revenue is going up. So this is why it's affected. Also insurance companies. Why is that? Because they have a lot of money that they manage for other people. Their pensions and in the IRAs and the Roth IRAs and this kind of money. So also insurance. So to summarize it, companies that are going to enjoy an increase in the interest rate are real estate companies, constructions, retails, and holding companies. Those who are not going to enjoy, actually they're going to get hurt, are banks, insurance companies, and credit companies like that give loans and stuff. And the only thing that I want you to understand, and very, very important to understand, so listen carefully when I say it, it really depends on the change it's going to be in the interest rate. Why is that? Because the market are price the change in the interest rate as 0.25 decreasing, all right? 0.25% decrease in the interest rate. That's what all the market is expected to happen. But if the interest is going to decrease in 0.5%, pay attention, it's going to affect the market even. It means that those who are going to enjoy it are going to skyrocketing, okay, because everyone is pricing it by 0.25, but the decrease will be in 0.5, so these stocks are going to skyrocket, and also those who are going to get hurt are going to get hurt strongly. So pay attention. I hope that you enjoy from this video. I'm Noah Madar. Please subscribe to the channel, The Traders. Please give us like. Let me know what you think about this video. Thank you.